You know there's Dasher and Dancer and Prancer and Vixen, Comet and Cupid and Donner and Blitzen. But do you recall your favorite lender of all? JLoan, your favorite lender. Happy Tuesday! That's right, we are officially 5 days away from Christmas, and I told you how much I love the Christmas holiday. I love the music, I love the people, the spirit, and so I just wanted to give you a little taste on your favorite day of the week. That's right, it's Mortgage Tip Tuesday. It's your girl, hashtag JLoan, coming at you with another mortgage tip. That's right, I'm not gonna forget about you just because it's the holidays, and I got some great information for you today. So hopefully you enjoy some singing. I want you to enjoy the rest of your week. I want you to go shopping. I want you to enjoy your family and just have a great time. If you're traveling, be safe. Now let's get to our Mortgage Tip Tuesday. Have you ever wondered, well, what happens if I don't have a credit score? What happens if I meet someone and they want to buy a house, but they just don't have credit scores? Can they buy a home? And the answer is yes, they can. But how they have to do that varies per loan type, whether it's conventional Fannie, conventional Freddie, FHA, VA, USDA. They all have their different guidelines. So I just wanted to tell you that yes, it is possible, but I also wanted to tell you a little bit about it, okay? So one, it does vary per loan type, okay? Typically, conventional, depending on the program, is going to require that you have to put 5 or 10% down. Again, depending on if it's Fannie or Freddie, one requires more than the other. Another thing that's really, really huge is having reserves. And they typically are going to want 1 to 3 month reserves. And so if you're not sure what reserves are, it's money that you will have in your bank or 401k, stocks, bonds, something that can be liquidated after you close. So after your whole transaction is done, how much money do you have left over? So your number of reserves is very important when you do not have credit scores, because they want to make sure you have money in the bank after you close your loan, okay? It must be a primary residence only. That's very important. You can't do no credit scores on investment properties or second homes, things of that sort. So it must be primary residence. And then this is for a purchase or a refinance. So we're not going to allow you to start taking out cash from the equity of your property. It can only be done for a purchase or a refinance, not getting any cash out. Now, this one is very important. It says 2 to 3 non-traditional trade lines are required. So the biggest thing is you don't really have credit on paper, right? Which means you don't have auto payments, credit cards, anything like that reporting, which gives you no score. So non-traditional trade lines are things that you're paying on a monthly basis, such as your cell phone bills, maybe auto insurance that you may be paying, anything like that, that is just not your typical credit cards or things like that. So if you want any more help or seeing if you have that, but again, paying car insurance, medical insurance, any of those things do count as non-traditional credit, and we need to get a 12-month history of that to make sure that one, you're paying it, how much you're paying of it, and that you're paying it on time, because that's super important, right? And then you have your 12 months rental income proof. This is required, and this is huge because sometimes you even need this if you have a borrower who does have credit scores because their file is just not as strong. So it's very important for you to understand that to get a loan with no credit scores, you must have proof of rental history of you paying it for 12 months. And it's very hard to prove cash. So I always tell you that paying by money order and keeping those money order receipts, paying by check, these are all like trackable things. And then if now they have where your rent actually reports on your actual credit report too. So if you have that, that does count. If you're renting from a family member, it gets a little tricky And so we'd have to really discuss that. That would make this video too long. So just letting you know, of course, I will help you and guide you along the right way, okay? Now, these are for fixed rate loans only. So you can't get an adjustable rate loan, any type of weird loan. So fixed rate only. And then your maximum debt to income is 43%, no exceptions. And I say this to say, when you have credit, depending on the strength of your file, some loans will allow you to go up to 50%. Some of them will allow you to go up to 55%. But when you have no credit scores, you're capped. And there is no way around that. Okay, so we will take a look at that. Then you have, you must complete a home buyer's course. So only one borrower on the loan must do it, but you must complete it. I always recommend that both of them do it, especially since these home buyer courses are free. And I think it's really great information and doesn't take up a ton of time. Again, buying a home is a huge, huge investment. So wouldn't you want to be best prepared? Take the course together, get your certificate, provide it to us. It will provide you great knowledge and information. And then unfortunately, you won't qualify for any down payment assistance or grant programs. Those are really, really capped at certain credit scores. Most of them go down to 620. So you're not going to qualify. But again, this is a situation if you got to buy now, right? Of course, I want you to be in the best situation. So if you have no scores, I can teach you how to build scores if you have time. Therefore, there's more product availability, better pricing, maybe some grants, something to help you do that. And then one thing that I didn't write on here is that, you know, lenders or the underwriter will look at, one, it has to get multiple reviews to get approved, but they do look for compensating factors, right? So one of the things that's a compensating factor is if you're paying rent now that's $1,500 a month and your new mortgage payment is $1,600 a month, there's not much payment shock. So an underwriter may be comfortable. But if you're going from $500 to a mortgage payment of $2,500, that's a big concern because you don't have credit scores that show you can pay debt that high. And that may be a reason not to approve your loan. Not saying it won't, that just may be a reason not to. So that's one. And then a compensating factor is that you don't have a lot of reserves. So if you have a ton of reserves, then it makes it easier for the underwriter to say, okay, well, this may not look so good, but look at how much money they keep here and things of that sort. So you want to really kind of live in a straight line and just really make sure everything's important. I tell people all the time, assets are a huge reason why sometimes loans that are borderline will actually get approved because of the fact that they show that you save money. And that's really important when it comes to buying a home, because if you lose your income, you lose your job, they want to know, well, can they continue to pay for their mortgage, or what does this do to their home? So I hope that this helps you. Again, it's never a way that I want you to have to go, but there are some people who live the way that they just don't want anything on credit. And so they come to buy a home and they're like, oh my God, I've been living my life and paying cash my whole life, and now I can't buy a home. Well, I don't want that to be you. So just letting you know there's options. Again, if you have time, I'll teach you how to build credit scores. But ultimately, at the end of the day, we're 5 days away from Christmas. I'm excited. As always, I want you to be safe. I want you to be blessed and enjoy your families, okay? Until next Tuesday, I will talk to you then. Bye-bye.